Greetings traders out there in Traderland, D7 here with Grok Trade, and I'm here in my rental in beautiful Indianapolis, Indiana. I'm going to start off here with the monthly charts. We're going to be looking at I'm going to go to the line charts instead of these candlesticks. Helps out a little bit, but the month is not even close to being over yet, right? But I just want to show you what I'm looking at here. On the monthly charts, we are converging. This is the spider, and we're converging into a symmetrical triangle. I'm expecting to get a big move at some point here. The question is this blue 20-month moving average, can we get above it where it's acting as resistance right now? It bounced off the 38.2 Fibonacci retracement, and we are seeing a crossover on the MACD, which is centered oscillator, to the upside. And we're starting to head higher on the RSI. So it's telling us we have a chance of going higher, but we had been going higher, so it's just reflecting price action up until this point. The question is, for the remainder of this month, will we stay within the apex of this symmetrical triangle, or will we break out sizably, or will we break down sizably? This is so important. That's why I'm starting off the video with this. We still have a lot of month left. But everything that I'm looking at has to do with this chart right here. Will we break those lower support lines, or will we break the upper resistance lines? Very important. That will set the tempo for the rest of the market going into the near future. Let's see, looking at the diamonds, if we can find anything. Same thing, symmetrical triangle. However, the diamonds monthly chart, at least at this moment, and it can change, we are technically above the upper trend line. Meaning, that is more bullish than it is bearish. Now, the big question is, what's the tech stocks doing? Nasdaq broke above it, so that's great news. That's more bullish than it's bearish, but the 20-month moving average is still above this area. The 20-month moving average could be resistance. Look here at the Russell's 2000. We broke above the trend line, not bad, but we stopped at the 20-month moving average. 20-month moving average is very important. All right, let's see what financials are doing. Financials bouncing higher, broke this trend line, which I've since removed. I'm trying to get my trend lines down if they don't matter anymore. But 20-month moving average, we're right at it. Because here it hit the 20-month, broke through it, acted as resistance. We're right there again. Will it be support or resistance? Right now it's acting as resistance. What's going to happen in the apex of this triangle? Gold monthly. Down, big symmetrical triangle, breakdown, and it's at this support level, and we're trying to find buyers, but the problem is we're on the lower side of that. That's not great. Silver monthly. Down, very extended to the downside. It wouldn't surprise me to get buyers coming in fairly soon, especially at this support level right here coming across. So I could see people coming in. VIX, choppy, and a big symmetrical triangle. Which direction will it go? Will it explode to the upside or to the downside? Whenever you have moving averages converging together and you have trend lines converging together and price action within those trend lines, that is set up for a major move one direction or the other. Quick look at Bitcoin monthly. Down. We have a support line. It needs to stay above that if it's going to stay bullish. If it breaks that, woe to that. Breaks over the top, fantastic. Ethereum broke over that trend line, but it has this one to contend with, and we're still below the 20-month moving average, just like Bitcoin is. Now, what the charts that are more important to me, or the next in line on importance, will be the weekly charts. Now, the weekly charts are now static, and those static charts mean a lot to me. Now, we had a market high here. We have lower swing highs, lower swing lows. We're dropping. Now we head higher. We have a shoulder, head, shoulder. It's called an inverted head and shoulders. The neckline is this red line coming across. We are above the 20-week moving average. We are now caught in a symmetrical triangle. It is telling, we have a it's anybody's guess what's going to happen in the very, very near future. As long as the financials can stay above these moving averages, it's going to remain more bullish than bearish. Now, but the jury is out. Who's going to win? The bulls or the bears here? Very, very important. This is on the financials, by the way. Financials that we're looking at. Going back up. If we look at the weekly chart on the Russell's 2000, my internet loads here. Come on. So I have fiber optics here, but we have a lot of rain, and I think the rain's jacking with our stuff. But here's the Russell's 2000. Same thing. We're caught up in the moving averages, more above them than below them. But this red line coming across, we hit as resistance, and we're caught up in this symmetrical triangle, and we're below this trend line. A lot going on here with the Russell's 2000. Just a quick look at financials. I want to look at this again. Big symmetrical triangle above the moving averages, but symmetrical triangle. This could go either direction. Nasdaq, weekly chart, bouncing off a support line. And these support lines, I got to be careful here. Let me show you. This is only one bar going higher. I'm not convinced that this is a real trend line. Let me go down to the Russells. I'm not convinced this is a real trend line. I'm a little early on this. Financials. This is one candlestick going higher. I feel better about that trend line than the other ones. Gold weekly, we're at major support here, so that's fine. Silver weekly, big time bullish divergence on silver. Guys, silver looks like a buy opportunity to me. Okay, now let's go back. We're looking at the Nasdaq. I can't call this a lower trend line. It may be if we get another week going higher, then I'll be more. I'll feel better about this trend line going higher. But I'm taking a liberty drawing that trend line right now. I'm not as comfortable. It's not as valid to me now. So anyway, but symmetrical triangle nonetheless. Diamonds. Look here. Come on, baby. Internet. Let's get going here. Crazy. A lot of time has gone by, and I lost my internet. The rain here, so I'm on a hotspot on my phone getting internet. So the diamonds, you can see here, we're slightly above the 20-week moving average, slightly above it. The Nasdaq, we're slightly above the 20-week moving average. The Russell's 2000, nicely above the 20-week moving average. Financials, nicely above the 20-day or 20-week moving average. Go back to the diamonds, we're barely above it. Symmetrical triangle below some major moving line, moving averages here, caught up in them. But the spider, what's happening with the spider? We're up over them, trying to be bullish. Big symmetrical triangle. We're at the zero line right now at the MACD. We're dropping, saying that we have a chance of crossing over and heading higher. Positive tick on the histogram. You can barely see it. But this is telling me on the weekly, we're caught up in moving averages. It's hard to find guidance here, guys. You can't just guess. Trading is about looking at technical analysis and weighing the odds in your favor to make trades. What I'm seeing here, you would be taking a big gamble, going all in long. We're going all in short at this moment because it basically at 50-50 at this juncture. I don't see anything weighing one direction or the other here. But what I want to do is look at the dailies to see if the dailies will give us any hint on what direction. So far, before I get into the dailies, let's talk about this. The monthlies are in a critical area on if they're going to pop higher, drop lower. The weeklies are saying we are definitely in these symmetrical triangles, and they're not giving us guidance on what direction. Let's see what the dailies tell us. The daily chart on the spider first. Let's blow this dude up so we can see it. Let's get rid of the candlestick so we can just simplify our life at this moment. But look at this candlestick. We're caught up between two trend lines right now, caught up in the moving averages, and we're below a trend line. So we got above this symmetrical triangle. We got above it. That's X% more bullish than it is bearish. That's very, very good. But is that a bear pullback to this rising moving average or trend line? And will it drop? If it drops, chances are to stay above this trend line right there. And then maybe hit this trend line, head higher. So I could see that happening. That means if that were to happen, next week will be bearish. And then the following week could be bullish heading higher. let's see. That may or may not happen. We could come up here and bait sideways and then rally higher, or we could hit our head and just crash and burn. So let's just see what happens here. Bulls the last 3 trading sessions have been in the lead. I mean, they have their chance here. And volume's been, fairly significant. Quick look at the diamonds. Same thing. We're down, down, down. We're up, 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 up. Just a bear pullback. This is ready for a drop to commence. We're caught up in the moving averages here. Question. Let's just see what happened. Like with this, if I go to a line chart, I need to draw another line here. So let's pop a line going from here to there. Snap it. Bam. Take it down here, snap it, bam. So I'm feeling good about that. We had a symmetrical triangle, it broke over the top of it. That's not bad, guys. That's more bullish than it is bearish. Nasdaq tech stocks, let's see what happens. We had that red line. Remember, guys, I said that red line, if it gets above it, it's going to be pretty bullish. And sure enough, it's above it, caught up in the moving averages. I mean, let's see if we can stay above that red line. That's not bad. MACD is still sub-zero, the 0 line down here. But this is the daily chart, Russell's 2000, small caps. We're barely poking our head above that red line. We're just above it, not bad. Let's see if we can get follow through and rally to the upside. Financials, red line, boom, look at this. Said if we got above it, 3 trade, Wednesday, we broke that red line and then off to the races. Very good. We want to pay attention to these red lines that I put on here. It's just playing out really well. Line chart. Quick look at gold. Gold. It needs to stay above this red line for it to stay valid, guys. Very, very important. It broke the upper trend line. We have a chance of going higher, but this could turn into a bear flag. Bear flag. I'd be looking to short this if it breaks down below this red line. Silver, this is on the daily. Silver's down, 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 does a pullback to the 38.2 area and the falling moving average here coming down, which is the 18 EMA, that's green on 18 EMA, finding resistance right there at it. Just a bear pullback. But we have a falling wedge. You can see the falling wedge here, which is more bullish and is bearish on the long term. But right now, there's a better chance of dropping than rallying up higher. But I could be wrong. Let's see what happens there. VIX, on the daily, it broke that trend line. When I say that red line, when I say it breaks that, if I go here, you can see this. It broke it on Wednesday. Thursday crash, Friday crash. So very, very bullish days. Not for the VIX, bearish on the VIX because it's inverted. It's an inverse security. We have major support coming up right here. Will we hit this support, find support, and then rally up? If it rallies up, fear will be spiking if and when that happens. Quick look at Bitcoin. Bitcoin had a few days to the rock. I mean, I'm telling you guys, Bitcoin and Ethereum are starting to correlate really nicely with the markets itself. I don't know if that's a good thing. I wish that they were not correlated, but we're at a major trend line. I mean, at a major trend line right now. We're up and we're starting to roll over at that trend line. So this could be ready to head down further. A quick look at Ethereum. We're been going up, getting ready to turn over. We're just caught up. As long as we can stay above the moving averages, that'd be a good thing. As long as moving averages are increasing and going higher. So there it is. There it is. Thank you, Mark, last week doing my video. I'm here in Carmel or Westfield, Indianapolis. This is my former home that now we lease out, and we're between people leasing it. We had missionaries here from Myanmar, which is Burma, and they were displaced due to some civil unrest, and they were with us for a year and a few months. And now they're heading back to Thailand. Well wishes to the Knoxes, and happy ventures to you guys, and be blessed in what God has for you next. Ironically enough, we have another set of missionaries who might be leasing our home going into before they move on out of the state. So I'm not sure how it's interesting that the missionaries are finding us. So anyway, we're here purging and prepping for the next group, whoever that next group might be. I'm giving you much useless information that doesn't matter to you. But if you want to connect personally, just personally with me, feel free to do so on Instagram. If you want to behind the scenes stuff, you're going to see my friends and family and more behind the scenes of who I am. And if you want to follow me, if you're a professional, more of a businessman or lady, connect with me on LinkedIn. I'm happy to be friends with you there. But anyway, markets are very interesting times. And going through this summer, guys, it's been a very challenging summer. One of the most challenging summers I think I've ever experienced in my tenure of trading. I'm knocking at the door of 30 years trading with technical analysis in live markets. It's just the techs just have been harder to read, and I think it's just with all the major uncertainties and all the new variances that are coming, and the iteration of bad things out there in the marketplace that is causing havoc in the traditional price action that we see in the markets, and it just has made things, especially swing trading, a bit harder. Day trading has been easier, but it's the swing trading that has been, just a little erratic, I would say. And I'm hoping things are starting to simmer down. I'm starting to find some level of normalcy in the price action at this moment, and I hope that it, remains. Overall, the big picture is, are we going to see the Fed lowering rates anytime soon? I don't think so. I think we have too much debt, too much inflation, or too much of an inflationary problem due to the debt. So that the inflation is the byproduct of our debt. So the debt's not going away. If the debt's not going away, can we expect the Feds to bump up rates anytime soon? I just think it's, I don't think that that's likely, or responsible. I think that we need to feel some pain, not because I look forward to pain, but I just think that we need to solve this problem that we have, and we need to be responsible and do that. So anyway, it'd be interesting to see how things play out, but I think when I called the market high back in January, when I said, hey, that this is likely, I was only a few days into it, and I said, this is likely going to be our high that will be there for some time. We will not see a new high. And sure enough, we are way far away now in price action from where we were at the beginning of January 2022. So that technical analysis held true. And anybody can learn how to read the charts. Now, I wasn't lucky on that. It was just when you see these opportunities, you have to say warning, 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 because certain levels are broken. But I've been saying warning, warning, warning for the last 5 years. But the markets kept going higher because people kept, the Feds kept dropping rates. The quantitative easing kept continuing. You can't fight the Fed. You just can't do it. So even though the markets were saying, here's the time that we should be breaking down, I'd warn everybody, the Feds would come in and it would rally to new highs yet again. And this time, when I called it, this time it was right. And I would rather keep calling when I see danger, because one time it will be right, and I was right on that one. When you have to call what you see, not what you think. And what we think will get us into trouble. What we see is reality. So the only thing we can do is quantify that reality. So what's reality? Price action and volume. Whoever quantifies that the best wins. If you quantify price action and volume the best, you win, period. And you want to learn technical analysis better than anybody else out there. You want to learn it. You want to not just be an enthusiast on it. You don't want to just master it. You want to be to the level of a doctorate when it comes to this. I mean, you want your PhD in technical analysis. So what we do on our 20-minute videos is what I would consider a 101 level. There's a 201 level, a 301 level, and a 401 level of technical analysis that really drives home what it is. But what's interesting is what we do show is very valuable, and the reason you've been following us for so many years. Some of you, I don't know how long you've been following us. If you put it down there if you've been following us for a while. And if you're a GrokTrade, say you're a GrokTrade. Especially if you have a comment, if you're a GrokTrade, always say GrokTrade, because you guys, if they say GrokTrade down there, that means they've been through the training. Pay special attention to what they're saying. They are very educated, highly sophisticated technical analysis, and their opinions hold a lot of weight. So listen to them, engage with them. Feel free to chat with them. But they're responsible, highly educated traders, and they've earned their right to trade in the markets, in the live markets. So they're killers. Those are the ones you don't want to be trading against in the markets. I promise you that. Anyway. And if you made it to this video, and you made it, say you made it. Nobody will know what that means, but you and me. I will know, you will know what it means, but just say made it. Let me know that you made it all the way through, because you're crazy, you're psycho. I don't know who stays on this long to listen to me drone on and on with these mindless monologues. I so wish that there was a better way in technology where I could get like immediate feedbacks or videos of your guys' reactions. Like one thing I studied nonverbal communications in high school to help me with the girls' body language, fancy way of saying body language, helped me with the ladies. But I got infatuated. I was just intrigued by nonverbal communication and took it on through into college and really delved deep into nonverbal communications. It would be so neat to have like the Brady Bunch type, squares, quadrants, where I could see you guys listening and watching my video to see your body language, what areas cause you to write down notes, what areas cause you to look at your phone and to zone out and stuff, so I could better the content that I deliver to you. But I think by content that I deliver, what I try to do is help you guys make money. My goal is for everybody in the Grok ecosystem to do better than all the other students out there. All the other people that take training and stuff, I want you doing better than all of them. I want you learning faster, making more money. And the reason I do these videos is to earn your trust, to say, well, these cats know what they're talking about. They are real traders. I'm an institutional trader today. Trade many millions of dollars in the markets on a day-to-day basis. But yet I'm here on YouTube and other social media talking about this for the average individual that wants to trade. The only reason I do it is to earn your trust, and because we teach 3 days out of 30. That's all we do. And we do it all online. So if it's for you, you know how to reach us. We're happy to teach you about the markets and how to trade responsibly with your eyes wide open. And you got to have that specialized knowledge in the markets to do it well and to get beyond the point of being a mere investor or a gambler in the markets. I'm droning. That's it. If you made it, made it. Connect with me on Instagram if you'd like, and LinkedIn. Love you all. We'll see you. Bye.